Hi, I'm Pattu from freefincal. Today let's talk about portfolio rebalancing and in particular a question that many new investors ask. Can I rebalance my portfolio by just changing the investment amount without redeeming and paying tax for it? So, um, every time I talk about portfolio rebalancing, people always ask me for examples. I have done this in the past. But let me offer you examples for this situation today. But before I do that, think of this example. Suppose you, let's say, today you try to make a mutual fund investment before the cutoff time, and you don't get the units allotted today. Tomorrow you wait for the units to be allotted, and the market has fallen down by, let's say, 5%. No, tomorrow also it doesn't get allotted. Day after tomorrow, you wait for it to get allotted, it doesn't get allotted, the market has fallen down by another 5%. You get really wild because you have missed out on a good buying opportunity, on buying when the market is actually down. Everybody would get irritated and annoyed because they missed the chance. Now, this is common, but put this situation when you rebalance a portfolio. You have a portfolio which has made a lot of gains in the last year. Let's say the equity component has made a lot of gains, and here you say that many people, not you, not everybody, literally you, many people say that they will adjust the investment they will make in the next few months and reset the asset allocation. But they don't mind if the gains fluctuate a little bit and they lose some of the gains over the next few months while they adjust this. How is this logical? It's the same logic, right? Every day you don't get allotment for your purchase and the market falls, you get really wild about it. But it's okay to let your gains potentially go away over the next few months while you reset your asset allocation. How? By adjusting your investments. Assuming this is possible. Where is the logic? That's the problem. We get scared of tax. I think we shouldn't. And I have talked about portfolio rebalancing several times. Right from the time freefincal started, I've been talking about portfolio rebalancing, making calculators for it. And I have already shown you that portfolio rebalancing reduces the volatility in your portfolio. It reduces the returns, how much the returns fluctuate. It reduces the fall during a crash or during market turmoil, and it also reduces the time during which the portfolio is in red. That is, you have a loss. So every signal, every possible indication tells you should rebalance your portfolio. And here we are saying, no, I'm scared of paying some tax. This is the problem that we have to get over. We are still thinking like a poor guy, and we have to get over, have a long-term view, and get used to it. So now to the examples. So suppose I start two SIPs. One SIP for 1,000 rupees in ICICI Nifty Index Fund. Another SIP for 1,000 rupees in ICICI Money Market Fund. So I start with a 50-50 asset allocation. For the first 3 years, I don't do anything about it. Then somebody tells me there's something called portfolio rebalancing. Then I go and look at the asset allocation. My equity asset allocation is now 57.8%. So it is 7%, almost 8% above my target asset allocation. So then obviously the debt portion is about 8% below the target allocation. So what should I do? I should redeem 7.8% of the total portfolio, an amount equal to 7.8% of the total portfolio from the equity fund, and put it in the money market fund. This is a standard way to rebalance. So you have to pay some tax if there is tax. Of course, 1 lakh if it is long-term capital gains, up to 1 lakh in equity is tax-free and so on. That is fine. But generally you have to pay tax. That's the general idea. The second option is you stop the Nifty SIP and you invest all the money, that is 2,000 rupees, the full amount that you invest every month, into the fixed income, that is a money market fund, and you keep investing in the money market fund until the asset allocation becomes 50-50. Here you will not pay any tax. Now the problem is the market will not wait for you to until your asset allocation resets from 57% equity to 50% equity. It will fluctuate wildly. The market can go up or go down. So that 7.8% is in this example is actually worth 7,200 rupees. That is 7 months of SIP. So for the next 7 months, you should not invest in equity and you should invest double the amount in fixed income. So, and you are assuming that will help your asset allocation go to 50-50. But market will not stay stable. It can fall, it can crash. All your gains can go. You got obviously 50% becoming 57% means you have made significant gains in your portfolio. That go to all those gains will evaporate. Where is the logic? I mean, will you let your gains evaporate just in the name of not paying tax and try to rebalance your portfolio over 7 months? That's just, it makes no sense at all. The other thing is you would say okay, this is for a few years. What about every year? Now after 1 year, if you just started that let's say you do 10,000 rupees in Nifty and 10,000 rupees in money market, after 1 year the 50-50 asset allocation will become 54% in equity. That's about 4.5% or almost 5% excess. This is 12,500 rupees. So 12,500 rupees means you just need to stop 1 month's SIP. Then you will be able to rebalance almost. But what if the market crashes big in that 1 month? Will you not regret that decision? And okay, people will say, I am a newbie, it doesn't matter, my portfolio is small, I will try to do this. I mean, people always have a very low opinions about themselves. They have they don't believe that they are ever going to get rich. Fine, all right, go ahead and do it. Think of what happens. Suppose if you already have 5 lakhs or in your equity amount, you have 5 lakhs in equity and 5 lakhs in fixed income, and then you continue doing the 10,000 rupees SIP. After 1 year, that you will have 7.6 lakhs in equity. So that 5 lakhs will become 7.6 lakhs after 1 year because of the last 1 year. The last 1 year it gains have been tremendous. There can be years where there is no gains at all. So that's like that's like about 4% deviation, and that is about 52,000 rupees. 4% deviation is 52,000 rupees of the total portfolio. This is 5 months SIP. What will you do for 5 months? You will say it's okay, I have excess equity. I will just stop my SIP in equity and I don't want to pay tax, and for 5 months I will reset it. That doesn't make sense. You will lose all your gains. You can lose all your gains, or you can make more gains. The market can go up. The worst is, why should we always think of the positive? The other thing can also happen. You will stop your SIP and the market can keep going up, and then you will still lose more of the gains. So either way, it makes no sense. Whether you are a new investor, experienced investor, immature investor, whatever you want to call yourself, I'm not saying that. Whatever you want to call yourself, please get used to the fact that you have to rebalance your portfolio to safeguard your gains in equity, or you're leaving the fate of your money to luck. And get used to the fact that you have to pay tax. Tax is the peanuts you pay to the government on the way to becoming a multi-crorepati. Think long term. Now don't think 1 year, 2 year. Think 20 years, 30 years, and over that time frame, you need to have multiple crores. I've said that several times before. So please get used to the fact and don't keep saying I will rebalance by adjusting investment amounts. That just is silly.